Hi, welcome back to CBSE Board Economics. I'm Saddam Hussain here. Today we will be discussing National Income Accounting of Macroeconomics, another very important topic, that is net value added at market price, net value added at factor cost, and the 5 questions we'll be discussing today. What is net value added at market price? What is net value added at factor cost? When is net value added at market price is equal to net value added at factor cost? Then you have the formula: net value added at market price is equal to gross value added market price minus depreciation. Net value added at factor cost is equal to net value at market price minus net indirect taxes, that is nothing but indirect taxes minus subsidies. Let's start today's topic. As we discussed in the earlier topic or earlier lecture, what is gross value of output and what is gross value added? I repeat once again, to produce a commodity, the firm has to use the 4 factors of production, that is land, labor, capital and entrepreneurship. These we call them as primary inputs or primary factors of production or 4 factors of production. Without these 4 factors, we just cannot do any production. Apart from these 4 factors of production, the firm has to use many secondary inputs. We call them as intermediate goods. For example, the firm has to use sugar cane in the manufacturing of sugar. The furniture firm has to use wood. And there are so many examples. So with the help of these 4 factors of production, other secondary inputs, the firm produces the output. If we take the value of that output, or if we evaluate its market price, we get the gross value of output. We have already discussed it. From this value of output, if we subtract intermediate consumption expenditure, we get gross value added at market price, which we discussed earlier. So we are going further. So that is the value addition made by the producer. So we're going further in this topic, net value added at market price. As we have seen already, to produce a commodity, the firm has to use so many fixed factors of production: machines, buildings, structures. So there is normal wear and tear and expected rate of obsolescence. So the value of this is called depreciation or consumption of fixed capital. If we subtract from the gross value added at market price depreciation or consumption of fixed capital, we get net value added at market price. We discussed already consumption of fixed capital. The definition of this is the loss in the value of a fixed asset due to normal wear and tear and expected rate of obsolescence. If we subtract depreciation from the gross value added at market price, we get net value added at market price. Now, to go further, what is net value added at factor cost? When the firm sells its output in the market, the government has imposed certain indirect taxes like GST, goods and services tax. At the same time, the government must have given some subsidies to the producers. So if you take the net effect of this, we call it as net indirect taxes. We discussed already, NIT is equal to IT minus subsidies, indirect taxes minus subsidies. We're subtracting the value of net indirect taxes, that is indirect taxes minus subsidies, from the net value at market price. We get net value added at factor cost. This is exactly the cost to the firm. So we repeat once again. So gross value of output, the formula which we learned, is equal to units into market price or sales plus change in stock, or the ultimate formula will be domestic sales plus exports plus value of goods kept for self-consumption plus a change in stock or change in inventories, that is closing stock minus opening stock. From the gross value of output by subtracting intermediate consumption expenditure, we get gross value added at market price. From the gross value added at market price by subtracting depreciation or consumption of fixed capital, we get net value added at market price. From net value added at market price by subtracting net indirect taxes, that is indirect taxes minus subsidies, we get net value added at factor cost. If they ask you, can net value at market price be equal to net value at factor cost? Yes, it can be when net indirect taxes are zero. NIT is zero, that is when indirect taxes minus subsidies are zero, or indirect taxes are equivalent to subsidies. And then you have the formula NV at MP is equal to GV at market price minus depreciation, and NV at FC is equal to NV at MP minus NIT or indirect taxes minus subsidies. And now I give you the final revision of all this. GVO at MP, GVA at MP, NVA at MP, NVA at FC, net value added. So net value added at factor cost, the last one, NV at FC. The five things: GVO at MP, gross value of output or market price, gross value added at market price, net value added at market price, net value added at factor cost. So these are very important. Ultimately, we take the net value added at factor cost of the firm. We don't take it net value at market price to calculate NDP or market price and factor cost. So the final revision will be, again I repeat all the four topics. To produce a commodity, the firm has to produce the four factors of production. Land, to produce a commodity, it has to take the services of the four factors of production: land, labor, capital, entrepreneurship, and other secondary inputs like raw materials. With the help of these inputs, the firm produces the output. That we call it as gross value of output. From the gross value of output, by subtracting intermediate consumption expenditure, we get gross value added at market price. From gross value at market price, subtracting depreciation or consumption of fixed capital, we get net value at market price. From net value at market price, by subtracting net indirect taxes minus subsidies, we get net value added at factor cost. So now this is easy. Remember the formulas, and you're likely to get a numerical from this where simple values are given. So net value at factor cost is actual contribution of the firm towards the NDP, net domestic product. So I'm sure you must have followed it. That's all we have time for today. Till we meet next time, it's goodbye from Saddam Hussein. Goodbye.